Good evening, everyone. This is Henry Gambell with simpleroptions.com, and in today's free video I wanted to spend some time looking at two particular setups and two different underlyings. The first that we're going to discuss here is Alibaba. And the thing about this chart is when I come back and look at it, and I always like using the weekly to give myself a little bit more clarity in the trend, and when I come back and look at this, I just don't see one hardly at all. You go back and look at prices that we had back here in 2015, and we're essentially unchanged. So in the big scheme of things, it's pretty much sideways. Then when you come into the daily chart, post earnings, you can see we had a squeeze that fired short. Earnings put a stop to that. Not only do these tend to kind of trade sideways after the earnings report, but you also find the underlying in a spot where you're pretty range bound against support and resistance. So how do you look to play something like that? Well, we've got a couple unbalanced butterflies in the chat room that I'm going to continue to work and add into, but it's not a bad spot to look at other strategies, like just a regular standard butterfly. Now, how would you want to structure that? The way that I try to look at it is try to put the body of the butterfly at an area where it's going to stay out of the money. So if we're going to do this via puts, it would be the idea of doing something like the 78 in order to hopefully keep it out of the money. The only thing is, if you go out into next week, I don't know that you're going to get quite enough premium to really make that worth your while. But I think if you step out into the monthlies, and let's just look at buying a standard butterfly. I will usually price these out $3 wide to start and see if I can buy them in the lower third of that range. And that would fit the bill. So $3 wide on each side, keeping the $79 put out of the money. Buy that for 89 cents, 90 cents, and then try to sell it somewhere around $1.80. So that's one way to try and participate in these directionless charts as they continue to chop and trade sideways. And another that has a very similar take to it is LinkedIn. This is another chart that over the course of, their entire quarter from the past earnings, 120 has been a fairly important area. Well, we slammed back into it today. And you can look at the exact same type of strategy, here again, trying to keep those 120 puts out of the money. You can see that there's somebody else that is at least working a vertical or something here with that 120, 115. I try to stick to these strikes where I see that liquidity, just in hopes of getting a better fill. Let's price this one out 5 wide, and look at essentially the exact same strategy, just a bit wider, but it still fits that rule of being in the lower third of the spread. So I think these are great strategies to look at to play sideways markets, to put time decay in your favor, and any way you can use technical analysis to back that just helps give you an edge in the trade. So I hope you guys found that helpful. One other thing I wanted to make sure that you are aware of is Ragi's class that is going to be going on. It starts this Saturday, May 7th at 1 p.m. Central, and then you're also going to have 2 days of live trading next week. She did a great job of calling that Euro pullback this week. Her Forex analysis continues to remain on point, and I think it's something you'll find very helpful, including with your analysis. So I hope it helps. You guys have a great weekend, and I will see you at the next free video.